Okay, so I'm going to talk about a strategy. This is going to actually be used not just at renewal. You can use it throughout the term of your mortgage, but when you do it halfway through your term, you obviously have to calculate there's going to be a penalty, which often means it doesn't make sense, but these are possible. So let's say you're coming for renewal. For this example, we're using $500,000 as what your renewal amount. So you may be higher or lower, but the principal is going to be the same. You come for renewal with a mortgage, and there is the first option you look at could be refinancing your mortgage. So redoing your mortgage, adding extra money to the mortgage. You have to have a certain equity position. So in Canada, you must have up to you can only refinance up to 8% of the value. So it means if you have a home worth $500,000, you cannot have a mortgage greater than $400,000. So what happens if you get to renewal and you need to have extra money to clean up some debt? You need to have extra money for some renovations, but you do not have the equity in your property to achieve that. Is there a way for you to still get extra money at renewal, or as I mentioned, partway through the term, without is there a hack to get around that rule? And actually, the truth is there is something called a cash out renewal or cash back mortgage. So let's say we come for renewal, you owe $500,000 at today's rate. That would be approximately $3,092 could be your monthly payment in that situation. So this can vary, but that would be what, as of this video's date, would be your mortgage payment. You can have a cash out renewal or cash back mortgage where you take out a 6.44 rate or a 7.09 rate. Now, why did you take out a higher rate? Well, if you take out a 6.44 rate, the lender would give you $15,000 in cash at renewal. If you take out a 7.09 rate, the lender would give you $25,000 cash at renewal. This is based on a $500,000 mortgage, so 3% of your balance or 5% of your balance. This means your payment would increase to $3,330 or $3,529. It means that for the example with 3% cash back, the $15,000 cash back, it would cost you approximately $14,280 over 5 years or 15 grand. So basically almost a no-brainer. A little bit more when you're doing a $25,000 mortgage, 7.09%, it's going to cost you $26,220. So we're talking about pretty nominal expenses to do it. Now, this is how this works. It's very, very interesting. Basically, what happens in these scenarios is the lender increases the rate to give you a higher payment, but they do not increase the balance. So even though in this situation you have a $500,000 mortgage and you're getting $515,000, your balance remains at $500,000. In this scenario, as you have a $500,000 mortgage, you'd be getting $525,000, but your balance remains at $500,000. So it keeps your mortgage balance at what's acceptable on as far as government regulations, but allows you to have extra cash out. So if this is a strategy that you want to talk about or have some more dialogue, you're coming up for renewal. Now you could do this, the way that you could do this if you were halfway through your term is that it just means some of your cash back would have to be applied to would have to be applied to your penalty. So if penalty is $5,000, in this scenario, you get $10,000. Now, you are permitted, if you're doing this scenario halfway through your term, to add $3,000 to your mortgage. So you could, in this scenario, you could increase your mortgage by $503,000. That's called capping. $503,000 to cover your penalty partway through. So you could still get the cash back. But we're talking about numbers that may or may not make sense. But if your need was urgent, definitely would be a consideration. So if this is a strategy that could help you out or a friend out, please reach out. Let's do a consultation and talk about doing a cash out renewal. Or maybe you're coming up for renewal and you want to look at different options. This is a great option for us to explore, even if we go a different direction.